Financial markets are of two types. The first one is the primary market and second one is the secondary market. This secondary market or the stock exchange, as we call, it helps in the economic growth of the nation. Stock exchange is an institution which provides a platform for buying and selling of existing securities. Through this ETS system, that is the electronic trading system, people from anywhere can invest in any part of the country. Hello everyone, I am Purnima, faculty in the Department of Commerce, Vidhyaashram Pre-University College, Temple of Excellence. In this session on financial market, I will be dealing with secondary market and what is the meaning of the word stock exchange, and also we will be discussing about the electronic trading system. Now let us see what is the meaning of the word secondary market. The secondary market is also known as the stock market or the stock exchange. It is a market for purchase and sale of existing securities. Now we should understand that financial markets are of two types. The first one is the primary market and second one is the secondary market. Now, the secondary market is also called as the stock market, or we also call it as the stock exchange. So, as the name itself suggests, it is a market for purchase and sale of stocks and shares and securities. Now, secondary market is the place where the people can buy and sell the shares. They can come and meet together and they can transact the business. Now, here the business is relating to purchase and sale of securities. Now, in the stock exchange, it helps existing investors to disinvest and fresh investors to enter the market. Now, in this stock exchange, we have the existing investors or people who are the owners of the shares. They have an opportunity to come and sell the shares in the stock market, and also an opportunity for the first time investors to invest in the shares. So, this stock exchange provides a platform for disinvestment as well as reinvestment, that is purchase and sale of securities. So, it provides liquidity and marketability to existing securities. Now, the secondary market is a place where it is giving the liquidity, that is you can always sell the shares, and also marketability. So, marketability means it is the place where you can market your shares and securities and other investments. Now, the secondary market also means it contributes to the economic growth by channelizing funds towards the most protective investments through the process of disinvestment and reinvestment. Now, this secondary market or the stock exchange, as we call, it helps in the economic growth of the nation. How it helps in the economic growth of the nation? By seeing that the funds go to the most priority sector of the country. So, what are the various priority sectors where we need to see that the flow of funds are there? So, this stock market or the secondary market helps to channelize the flow of funds to those areas which are considered as the priority areas by the government. Then securities are traded, cleared and settled within the regulatory framework prescribed by SEBI. So, whatever transactions are taking place in the stock exchange or the secondary market, they are regulated by SEBI, that is the Securities Exchange Board of India. Now, let us look into the meaning of the word stock exchange. So, we often come across the word stock exchange. Now, let us understand what is the meaning of the word stock exchange. A stock exchange is an institution which provides a platform for buying and selling of existing securities. As a market, the stock exchange facilitates the exchange of a security into money and vice versa. So, stock exchange is an institution which provides a platform for buying and selling of existing securities. So, stock exchange is a platform where we can buy and sell the securities, and as a market, it facilitates the exchange of securities. That is, a person who wants to sell can sell the securities and person who wants to purchase can purchase the securities. So it is a platform where we can purchase and sell the securities. Now, let us look into the definition of the stock exchange as per the Securities Contracts Act of 1956. Stock exchange means any body of individuals, whether incorporated or not, constituted for the purpose of assisting, regulating or controlling the business of buying and selling or dealing in securities. Now, if we can look into the definition given by the Securities Contract Act of 1956, it tells us that it is a body of individuals or a group of individuals, whether they are registered or not, they are formed for the purpose of assisting, regulating and controlling the business. So, stock exchange has been formed to assist, regulate and control the dealings of the stock exchange, whether there is purchase or sale of securities. So, it has to be done as per the rules and regulations laid down by SEBI. Then, next, let us see what are the functions of the stock exchange. Now, here the first function is providing liquidity and marketability to existing securities. It gives investors the chance to disinvest and reinvest. It provides both liquidity and easy marketability to the already existing securities in the market. Now, the first function of the stock exchange is it helps the persons to disinvest and reinvest. That is, the persons who have already invested, it helps them to sell the securities, and the persons who want to buy the shares and securities, it gives a platform for them to purchase the securities. So, in this way, it is helping in liquidity and marketability of the existing securities. As you all know, the secondary market is the market where the shares which are already issued, they are being traded, and primary market is the place where the IPO or the initial public offer takes place, and secondary market, it is the market where the shares already issued will be traded here in the stock exchange. Now, the next function of the stock exchange is pricing of securities. Share prices on a stock exchange are determined by the forces of demand and supply. A stock exchange is a mechanism of constant valuation through which the prices of securities are determined. So, next is the pricing of securities. Now, what do we mean by pricing of securities? As we all know, in the stock exchange, there will be a lot of buyers and there will be a lot of sellers of shares. Now, the forces of demand and supply will be acting in the stock market, as a result of which the price fixation of the shares takes place. So, whenever the prices of shares for a particular company rises, it means that there is a lot of demand for that company's share, and when the prices fall, it means that that company's share are not in demand. So, in this way, this stock exchange helps to act on the forces of demand and supply, and as a result of which it will fix the share prices of the various companies. Then, the third function of the stock exchange is the safety of transaction. The membership of a stock exchange is well regulated and its dealings are well defined according to the existing legal framework. Now, we can always say that the stock exchange is well regulated by the regulations of SEBI, as a result of which any investor can have a safe investment in the stock exchange. So, through the stock exchange, his dealings are safer. Then, the next function of the stock exchange is it contributes to economic growth. Now, how does the stock exchange contribute to economic growth? So, it is a market in which existing securities are resold or traded. Through this process of disinvestment and reinvestment, savings gets channelized into their more productive investment avenues. So, in the functions of stock exchange, the fourth function is it contributes to economic growth. Now, how does it contribute to the economic growth? So, whenever the securities are being traded in the stock exchange, so it ensures that some of the priority sectors get almost almost all the funds. So through the regulations of SEBI, we can see that the priority sectors get financed more easily than the other sectors. So in this way, when the priority sectors are given more importance, or when they are financed properly, then we can expect to have proper economic growth in the economy. Then next one is spreading of the equity cult. Now, the stock exchange can play a vital role in ensuring wider share ownership by regulating new issues, better trading practices, and taking effective steps in educating the public about investments. Now, in the spreading of equity cult, we can see that the stock exchange gives a platform for the first time investors to invest in the equity shares of the company. Through its education, awareness, and other programs, it is inviting the public to invest in shares, as a result of which they can just come and invest in the equity shares of the companies. Now, the sixth function of the stock exchange is providing scope for speculation. The stock exchange provides sufficient scope within the provisions of law for speculative activity in a restricted and controlled manner. So as we all know, in the stock exchange, the forces of demand and supply will be acting, based on which the share prices will be fixed. Now, certain level of speculative activity is necessary in a stock exchange because it will help in fixing the prices of securities, and we notice that this speculative activity will be done in a controlled manner in the stock exchange. So this will ensure that liquidity and marketability of the securities. Now, next, let us see what is the trading and settlement procedure. Now, the trading in securities is now executed through an online screen-based electronic trading system. A stock exchange has main computer system with many terminals spread across the country. Now, we know that the stock exchange goes on through the electronic trading system. If you can see pictures of the stock exchange, we have a huge screen where the share prices of all the company shares which are traded in that stock exchange, it will be just moving up and down. The graph will be moving up and down. This stock exchange has a computer system with main terminals spread all over the country. The trading in securities is done through brokers who are members of the stock exchange. Trading has shifted from the stock market floor to the broker's office. So as we all know, the trading in securities is done through brokers who are members of the stock exchange, and almost all the trading goes on in this electronic trading system rather than the stock flow. As we all know, in the beginning of the stock market, which was established in Bombay in the year 1875, the share prices of stocks and shares used to be shouted out aloud by the people. So those who wanted to sell, they used to just shout about prices at which they were willing to sell the shares, and persons who were willing to buy at that price who are interested, they used to go and approach that person and buy the shares. Now, this system has been stopped after the advent of the electronic trading system. So, every time the share prices keeps on rising and falling, this electronic trading system keeps a record of it, and it reflects the share prices every moment and every second. So, at the end of the day, we can know whether the share prices have risen or fallen. So, it is through this electronic trading system we can ensure that the prices are fixed in the stock exchange. And then next, every broker has to have access to the computer terminal that is connected to the main stock exchange. So, in the screen-based trading, a member logs on to the site, and any information about the shares he wishes to buy or sell, the price is fed into the computer. The software is so designed that transaction will be executed when a matching order is found from a counterparty. So in this trading settlement and procedure, we should notice that every broker will have access to the main computer terminal, and then in this screen based trading, a member logs on to the site and any information about the share can be got, and then he can notice the prices of shares and securities whatever he has, and then depending on the price he can just decide to buy or sell the shares. Now whether transaction will be executed when a matching order is found from a counterparty. Now suppose a person A wants to sell the share prices of a certain company at rupees 300, then it will reflect that, and if there is a person who is willing to sell the shares at rupees 300, then that transaction will be executed. So in this way it will wait for a matching order from the counterparty and then the transaction will be executed. So in this way, with the help of technology and the electronic trading system, almost all the company shares can be traded easily, and people worldwide have access to almost all the stock exchanges of all over the world. So sitting in India also, we can also invest in the shares of different countries. So this is a worldwide network which has computer terminals all over the world. Now let us look into what is the meaning of the electronic trading system and what are the various advantages of this ETS. So we call it as the ETS, that is the electronic trading system or the screen based trading. So what are the various advantages? Now first one is it ensures transparency as it allows participants to see the prices of all securities in the market while the business is being transacted. So they are able to see the full market during real time. Now there is lot of transparency because of the electronic trading system. Why? Because everybody can see the share prices of all the shares in the particular stock exchange. So they can see the share prices of all the companies and they can decide whether to buy or sell the shares, and because of which we say that it is ensuring transparency. So it is a very transparent system. Then the next advantage of having the ETS is it increases efficiency of information being passed on. That is, it helps in fixing prices efficiently. The computer screens display information on prices and also the capital market developments that influence share prices. So here we can notice that it increases efficiency of information, because every time there is a fall or rise in the share prices, it will be reflected on the computer screen, and because of this constant fall and rise in the share prices of securities, they will ultimately come and fix a price for each company's share, and because of which we say that it increases the efficiency of information being passed on. Then the next advantage of having the ETS is it increases the efficiency of operations, since there is reduction in time, cost and risk of error. So through the ETS system, it will increase the efficiency of operations, because we need not go in search of information, because all information whatever we need, it will be available in the website. So any person who wants to be an investor, he can always go and log into the website and get all the necessary information he wants, as a result of which can save the time, you can also save the cost and also the risk of error. So first hand information is always available at the website. Then people from all over the country and even abroad who wish to participate in the stock exchange, they can buy or sell without even knowing each other. So through this ETS system, that is the electronic trading system, people from anywhere can invest in any part of the country or any part of the world. They can buy and sell securities without even knowing each other. So this is a very transparent and a very, very efficient system of investing. Then next one is a single trading platform has been provided as the business is transacted at the same time in all trading centers. Now this electronic trading system has been provided because it is a single platform where anybody from all investors from all over the world can log in at once and they can always fix the prices of shares. So with the constant forces of demand and supply applying on the share prices of the various companies, the price fixation takes place and everybody can log in at the same time and they can make their investments. So this creates a platform for everybody to transact business at the same time. Then let us look into what are the various steps involved in this ETS system. The following steps are involved in the screen-based trading for buying and selling of securities. If you can see here, there are two people who are dealing with the securities here. So, if an investor wishes to buy or sell any security he has, first, he has to approach a registered broker or a sub-broker and enter into an agreement with him. The investor has to sign a broker-client agreement and a client registration form before placing an order to buy or sell securities. Now, any person who wants to buy or sell securities, he has to just first approach a registered broker or a sub-broker and enter into an agreement with him. After that, the broker will open a demat account and then he can trade in the securities and shares. So, the investor has to sign a broker-client agreement. The investor signs an agreement with the broker and then he will sign on the registration form and then place an order for buying or sale of securities. So, this is the first step in trading through ETS. Then the second step is he has to open a demat account or the beneficial owner account with the depository participant for holding and transferring securities in the demat form. He will also have to open a bank account for cash transactions in the securities market. Now, the first step is we have to just sign an agreement with any stock broker and then the next step is we have to open a demat account with the depository participant. Now, who is a depository participant? We'll just discuss in the next session. So, for the time being, let us understand that any person who wants to be an investor, he has to open a demat account with the depository participant for holding and transferring the securities in the demat form. Now, what is the demat form of securities? That will be discussed in the next session and he will have to open a bank account for cash transactions in the securities market. Now, the third step in this process is the investor then places an order with the broker to buy or sell the shares. Clear instructions have to be given about the number of shares, the price at which the shares should be bought or sold. Now, the third step after opening the demat account is the investor has to place an order with the broker whether he wants to buy the shares or sell the shares. Now, before buying or selling the shares, he has to mention the number of shares which he is ready to buy or sell and also the price at which he is ready to buy or sell. So, this is the third step. Then the fourth step is the broker will go online and connect to the main stock exchange and match the share and the best price available. Now, the fourth step is the broker. He will have to go online and check the best offers which are available which matches the prices quoted by his client. Then the fifth step is when the shares can be bought or sold at the price mentioned, it will be communicated to the broker's terminal and the order will be executed electronically. Now, in the fifth step, when there is a matching order by a counterparty, then that such contracts will be matched and the order will be easily executed. So, this is the fifth step in the electronic trading system. Now, after there is a matching of orders, the next step is the trade has been executed within 24 hours. The broker issues a contract note. So, this note contains the details of number of shares bought or sold, the price, the date, the time of deal and the brokerage charges. Now, after the trade has been executed, so within the 24 hours, the broker has to issue a contract note. Now, what does this contract note contain? So, in this contract note, it tells us the number of shares bought or sold, the price at which it is bought, the date, the time of the deal, the brokerage charges, etc. Then, next, this is an important document. What is an important document? The contract note. The contract note is an important document as it is legally enforceable and helps to settle disputes or claims between the investor and the broker. A unique order code number is assigned to each transaction by the stock exchange and is printed on the contract note. Now, this contract note is a very important document which has to be maintained by the client as well as the broker. Why? Because if there are any disputes between the client and the broker, it can be settled on the basis of this contract note. Now, every contract note will be given a unique code number by the stock exchange. Then, the next step is now the investor has to deliver the shares sold or pay cash for the shares bought. This is called as the pay-in day. Now, in the pay-in day, the investor has to deliver the shares sold. So, if the person has sold the shares, then he has to deliver the shares to that particular party. If he has purchased the shares, then he has to pay cash for the shares which he has purchased. The day on which he does this, it is called as the pay-in day. And then cash is paid or securities are delivered in the pay-in day, which is before the T+2 day, as the deal has been settled and finalized on the T+2 day. The next step is the payment for the shares purchased or the shares which are being traded or sold, they have to be exchanged to the other party. Now, this effect of this transaction should be settled within 2 days. That is, after the trading, the stock exchange will give 2 days time for settlement of the trading. So, it has to be done within this 2 days. Now, the cash is paid or securities are delivered on pay-in day, which is before the T+2 day, as the deal has to be settled and finalized on that day. The broker can make delivery of the shares in demat form directly to the investor's demat account. Then, after the pay-in day, the broker can make delivery of the securities. So, when the investor has purchased the shares, then the shares have to be credited in his demat account, or if the party has sold the shares, then that amount should be credited in the demat account of the client. So, in this way, we can see that the trading and settlement takes place in a stock exchange. So, in this session on the financial market, secondary market, the meaning of stock exchange, functions of stock exchange, and also the trading system which is being followed in almost all the stock exchanges of India, and also the steps in the trading settlement which is followed in the stock exchanges. Hope you have all understood this. Thank you.